Well, really excited to have a great panel with us. How about we start with some introductions, just your role and a little bit about the company.
Great. Yeah. Hi, I'm Amy Fisher. I lead crypto and Web3 at Plaid, focused on connectivity.
Hi, good afternoon. My name's Mayank. I lead payment partnerships at Circle.
My name is Bradley Reese. I'm the CCO at Checkout.com, but I spend the majority of my time now focused on our Web3 related activities.
Fantastic. Really excited to have the panel here. I'm going to jump right into it. I feel like when you have payment players on a crypto stage, you have to ask the obligatory payments in crypto question. I'm just going to go straight to the answer. Real-time payments or everyday payments are not happening in crypto today. What do you think is preventing that, or do you think that will ever happen? How about Mayank? We'll start with you.
It's such a provocative way to start the question by starting off by saying it's not working. I think,
or challenge me on that assumption.
No, yeah, I think there's so payments is a broad topic, right? Yeah. So payments, I think when I first think of payments, I think of payment acceptance, primarily just because of my past life working on payment acceptance related stuff at merchants. I think it's very easy to start with crypto payments and think of that as the killer use case where there's really high fees for merchants, a lot of friction, and significant opportunity to theoretically make that a whole lot better. But I think you're absolutely right. When it comes to payment acceptance, I don't think there's significant demand right now in terms of folks saying, hey, I have a crypto asset or a stable coin and I really want to make payments. I think on the other side, though, there's other parts of the value chain where I think we are seeing progress today. I think with payouts, I think we're seeing a lot more coverage where folks are starting to see expensive payout rails in various markets, developing economies, and so on. And I think there's opportunity to improve it there. I think the biggest hurdles I see in terms of adoption right now is really when it comes to regulatory clarity. I think if I were to think about a global corporation, even if there's significant value that you can identify with crypto payments, the lack of clear guidance in terms of what licensing requirements would exist in order to accept a payment, facilitate a payment, and so on, the nuances of how it differs within a region or intra-regions and so on, I think just makes it extremely challenging. And then I think the second piece that's also inhibiting it is really just around user experience. I think ultimately it's very easy for a crypto native person, someone that's familiar with a wallet, to say, hey, you just click send, you click paste, and it's just seamless. But the tap, insert, swipe mentality that everyone has today is just so ubiquitous. And I think there's really some work that needs to get done in order to bridge that gap.
Amy?
I'd say there's three things, and you touched on some of this. It's user experience, it's being perceived or being possible for being a vector for fraud is the second one, and I think it's also utility. And I think those three things are areas in which we're seeing a lot of things try to be solved through partnerships. Well, I think the payouts have improved. Pay-ins are an area where we can see a lot of improvement also.
Bradley?
They've said it all. I agree. On the payout side, you're comparing the efficiencies of blockchain, especially on the international side, to something like the SWIFT network.
Right.
I mean, that's night and day. 5 days, $35. You fat finger your account number wrong, the money can actually disappear. Cryptographic proofs are more secure. Even the FBI have come out and said this. Proof of stake networks, Lightning, Polygon, Stellar, Solana, zero cost, literally. And then, of course, there's lots of other functionality, like it arrives within 5 minutes. It allows people to hold a digital asset they can immediately do whatever they want with. So I think on the international side in payouts, we're seeing a lot of adoption because it's solving a real problem. I agree on sort of the regulatory piece. I won't touch on that now, but talking about incentives is also key because a new technology will replace an old one if it is better. Like the world is a meritocracy. When it comes down to blockchain, there's many ways in which it is better, but there's some ways in which it's actually not. It's not supposed to be used for everything. But the biggest issue I see on the retail payment side today is, to your point, man, like the ease of looking at my phone and making a transaction using NFC and Apple Pay. You can't beat that user experience. Right. The fact that that links to a credit card that gives me 2% rewards and that it pulls the funds out of my Bank of America account where I'm earning 0% interest, like that makes sense. If I have Ether, well, my Ether's all staked. I'm earning yield on that. I don't want to unstake it. If I hold Bitcoin, it's a deflationary asset. It should, in theory, grow in value over time. So I don't really want to pull down that either. So you have that sort of interest rate argument that you're incentivized to spend your dollars, which are inflating away in value. And then, of course, scanning QR codes with MetaMask or anything else. It works, but it's just not as easy as tapping your phone and walking away. And then the final thing, of course, is rewards. I think all of these things can be fixed. And I think probably the biggest news that no one got excited about was account abstraction. And that, for me, is going to be the thing which will bring a lot more merchants in. Because from a merchant perspective, if you're Netflix or Spotify, you have a subscription model. How do you do subscriptions? Well, account abstraction can actually solve that.
Can you explain what account abstraction is?
Badly, yes. In terms of functionality, you're letting the smart contract basically set terms of an agreement.
Right.
So if you imagine this in that use case of signing up for Netflix, you would effectively have parameters in the smart contract that would say, this wallet can be drawn down by this address for this amount in these situations. So there's lots of different parameters that you could put in. And of course, this could be used for anything. You could, in theory, lock purchases or send someone Ether and say you can only use this for, I don't know, buying food for yourself or something if you're a parent sending money to someone at university. So it's very, as people have often said around crypto, it's programmable money, or it can be. Again, but you can apply that to stablecoins. It doesn't have to be to a cryptocurrency, so it can work on both sides. But the beauty of account abstraction is just the headline, the feature-rich environment of card processing specifically, but also ACH and other networks, can be realized in crypto through this methodology.
Right. I love that. Double-clicking a little bit, Bradley, you started comparing Swift to blockchains. I mean, when you zoom out and not just focused on payments, when you look at Rails, blockchains, protocols overall, there is a lot of talk about moving value over these chains. Like, what other use cases do you guys think blockchains and protocols unlock? Tee it up for anyone.
Yeah, I think for me, I think Circle, what we do is we effectively upload the dollar onto the internet. And I think there are three value props that are super important to me when I think about uploading the dollar to the internet in terms of what that can actually enable. The first one, enabled by blockchain technology, is really centered around enabling anyone around the world to open a bank account or an account that can hold value within 30 seconds or less. It's been a while since I think all of us have opened up our first financial account. But in a past life at Uber, we were actually one of the largest referrers for first-time bank accounts around the world, since drivers had to have a bank account in order to drive with Uber. And I think the level of friction, the amount of effort, the amount of documentation required in order to create this account really prevents so many people from getting access to the digital financial economy. And allowing anyone to be able to download one of these apps, click a button, memorize a seed phrase, write down a seed phrase, or thanks to account abstraction, hopefully not even need to worry about a seed phrase in the future, is really, I think, a powerful concept. The second thing I think that is really important is really around then allowing someone around the world to be able to hold a reserve currency. So many folks around the world are beholden to the financial policy, the monetary policy of their government. And sadly, in so many instances, they suffer from hyperinflation and inflation as a result of this. Allowing someone to be able to take control and say, hey, I believe in this currency's monetary policy and I want to hold some of my savings in this currency, I think is extremely powerful from an economic prosperity perspective. And then the last one is really just around the most powerful part of the blockchain technology in terms of record keeping and making it easy to actually move financial value and value across the world. Growing up outside of India with all of my family being in India, I can just think about something as trivial or as small as wanting to send $20 to my cousin for their birthday. It can be as simple of a use case as that, or it could be someone wanting to send money for their family back home as a remittance payment or something like that. We truly believe that by uploading the dollar to the internet, we can improve the economic prosperity of people around the world. And that's something which I feel like is what gets me up every day, focused on this tech and payments.
It's great. Inspirational. Amy, Bradley, any thoughts?
So the stablecoin use case is very interesting to me, and it was one of the first light bulbs that clicked for me in learning and going down the deep dives of crypto many years ago. I grew up moving around internationally, and when I was very young, lived in Argentina, and remember my mother pre-totaling groceries before checking out because of hyperinflation being so bad during the 80s. And it really makes sense, having traveled and having looked at countries that have so much of their population being unbanked, and because of the trust in banks, moving things towards a digital future and improving the onboarding experience is something that we focus a lot on at Plaid. And this is beyond blockchain. I think blockchain is one of the tools in the toolbox to be able to lead to more economic prosperity. But I have to plug the work going around on open banking and empowering the consumer to own their data, to be able to move their data to the different financial apps that they're using. And then I'll pass it to you here to be able to connect that to other experiences as well.
No, I mean, again, agree with obviously what both of you are saying, but it's technology at the end of the day. So it's not always about money. If it is about money, well, we talked about international remittances and obviously US dollar hegemony and the distrust that exists in markets like Argentina, where there is a precedent for the government just literally locking up the funds for a year, and when you get them back, half of them are mysteriously devalued. That's obviously an emerging market use case where you have a distrust of your government. There's so many others though as well, and I think that when you're thinking about when should you use blockchain, should you do a private blockchain? Probably not. You know, if it's just your information, just use SQL. It works perfectly well. Like, don't try and fit it in where it doesn't belong. But if the characteristics of what you're ledgering needs to be public, trustless, and immutable, then it may be a good fit. Bill of lading for ships. You could imagine property markets. I mean, people talk about these use cases, but there's a reason why. You're solving a problem in a more efficient manner. If you're a realtor, to go get all the liens pulled from a property is actually expensive and takes a lot of time. If this was just represented with a house as a soul-bound token, with NFTs representing each lien underneath, everything would be instantly available and it would be perfectly trusted. The trusted piece is important. Title insurance in the US. What on earth is title insurance? But it costs thousands of dollars every time someone buys a house. And it's just an inefficiency in record keeping that makes it a requirement. If you think about, I mean, Ed being a Zero Hash's CEO, being a Swiftie, big fan of her concerts. But again, you get a ticket as an NFT. Why is that better? Well, we talked about things like smart contracts being programmable. A lot of artists don't like scalpers who will, buy all the tickets and then sell them for hundreds of dollars more. There's been some bad behavior in the ticketing industry from the ticketing companies encouraging this. So again, you could program into that ticket that the resale value is locked at a certain price, either that price or maybe 50% more. So you give power to the artist to control their fans' experience. Now that NFT that they're custodying in their wallet, well, a wallet, let's be clear on this. It's a bank account that can receive more than money, and it's an email address without a spam folder. Brands will eventually wake up to the fact that this is probably the greatest untapped marketing channel we have today. And once that NFT is in that Swiftie's wallet, if she chooses to, or her team could send promotional material, videos from the show. It's all about engagement. It's about building that brand. You could, again, incentivize repeat visits, give 5% off for a concert ticket if you've been to 3 previously. So it's just about enriching the experience. 2 completely different use cases. Add that to the money remittance one, 3. And this is the point. We're really early. I don't think we found most of the use cases yet, but there are ones that are clearly better than what we have today. And again, going back to that view, the world is a meritocracy. If it improves or enhances on what we have, it will proliferate.
I think that's a really interesting point that you touched on towards the end. For someone like me, I've been in the payment space for about a decade now, and anytime I think of crypto or blockchain, for me, I always take the payments only approach. And I think it's very easy to forget just how composable the blockchain technology is, where you can start layering a use case and start adding payments to it, or you can start with payments and add another use case to it. The loyalty play that you mentioned is something that is extremely fascinating for me, and I'm really excited to see kind of that intersection where companies, brands, and so on may start with the loyalty angle and then choose to do payments first. And I think that'll be a really interesting.
I agree. Look, if you're lining up to buy a pair of Nike shoes and they cost $500, I don't understand why Nike is selling NFTs to that person. Give them an NFT. Today, they may be a cash buyer. You know nothing about them. You just know they bought a pair of shoes. If you give them an NFT, QR code, or anything else, various different ways of delivering it, if they choose to mint it effectively, as I said, you've now got access to that direct communication tool that can be used for much more than money or messages. And I think that's kind of, again, one of the ways that brands will start interacting with it. But yeah, look, I think non-fungible tokens, there's a clue in the name. Maybe you shouldn't be selling them for millions of dollars. Maybe you should be giving them away.
It's very interesting. And I think the 2 areas where I see us making a lot of progress, and it's tangential to payments and very involved in payments, are identity and wallets. And you've really illustrated that example well. I think, speaking of us being early, I think if you go back to a couple years ago, people would ask the question, like, where are we on the blockchain journey? Now there are technologies like AI that are really, really taking the spotlight. I think when we think about these big seismic changes that happen to infrastructure, we're as a society, very quick to move on to the next one. I often like to think about email, and email in a common day is something that, I wake up, probably the first thing I do is look at my inbox, right? Like and I think back to a world where this wasn't used. And email was created in 1972. Right. It wasn't normalized until far later. It takes a while to make these seismic changes because of how ingrained they are in the way that we work. And humans are a bit adverse to change. And there is often a tipping point for adoption. And I think another area where we're seeing resistance to this is the amount of adoption, right? And I think until we move forward in partnership and either decide that this is the best technology to use and show and educate around this, or show the value of how it's better, it's going to be slow progress, but it's incremental progress.
I think a theme I take away is don't have solutions that look for problems, but try to solve the problems that the space is known for. So Bradley, I might be butchering this, but I think you've had a controversial take that says crypto tokens won't work as currency. You touched a little bit on Bitcoin and Ethereum earlier. Can you expand on that take? Is that accurate? We'd love to hear what you meant by that.
I think the crucial word is yet, or today, or in their current form. And we touched on this with the previous question. Compared to let's use cards, the most prevalent, widely accepted. There's billions of cards that exist on the planet, and they have a lot of rich features. And you could make a list. I have made a list. But compare it on any level you want. Incentives for the customer. Well, they get rewards for using their card. It's literally frictionless. The user experience is perfect. From a merchant's perspective, they have lots of tools like refunds. That's important. They want to give people their money back if something goes wrong.
Right.
Chargebacks, which protect the consumer if something's not delivered. There's recurring payments, subscriptions. There's many things missing from cryptocurrency today, which the traditional world has had a long time to iron out and optimize. And as I said, things like account abstraction will start to move that needle and change it, and it will start to equalize the playing field. But fundamentally, it's about incentives. Right. And look, no one does anything in this world without incentives. It's what drives human behavior. It's what drives evolution and everything else in between. And so you need to work out a way to encourage someone to unstake their Ether or use their precious Bitcoin and send Satoshis to a merchant. Because right now, personally, I don't want to unstake my ETH. It's doing great for me. I don't want to use my Bitcoin because it's deflationary. So again, fundamentally, you're not really encouraged to use these, but loyalty, other aspects, you could imagine merchants now maybe moving the paradigm away from banks and loyalty schemes provided by them to potentially merchants. Right. And so if you're getting something for free or something additional or something that adds value, like an NFT when you buy a particular item, I mean, it could be a game, it could be anything else, then you start to give a different sort of incentive that isn't based on points and interchange and that whole model. I'm not saying that the card systems are wrong, because that model works really well. Merchants like it, consumers like it, it works. Right. Crypto hasn't caught up to it.
Right.
I think about two distinct examples around the world when I think of just the power of crypto in general. The first is hearing stories of friends over the last few years visiting Turkey when they were suffering hyperinflation, and they were telling me just every time they watched TV, every other commercial was effectively advertising Bitcoin. It allowed so many folks to effectively get into the space, but the only way to hedge against your local currency shouldn't be that you should believe a white paper and a project and effectively move all of your savings into that project. There's a world where that has a very important role in the world, and I'm not diminishing it by any means. But for a normal person that may have just heard about Bitcoin for the first time from a television commercial because of the inflation, in their country. Just asking them to suddenly say, don't trust this, but trust this instead, feels a bit odd. The second kind of example that I think about was hearing all those sad stories of refugees leaving Ukraine after the war started last year, and reading about folks getting a flash drive, a hardware wallet effectively, and moving all of their money into crypto to cross the border, knowing that their bank may not exist or function in the other country. When you're doing that swap, you shouldn't have to rely on what the volatility of Bitcoin or Ether or one of these assets are. I completely agree with your point. There's a disincentive to spend, but in addition to that, you also want to ensure that it actually solves the purpose that the person is trying to have. I've been in the blockchain space for a really long time now, and I think the thing that excites me every day about stablecoins and Circle's vision is effectively, we want to be boring. We want to be linked to the US dollar and aim for that dollar to stay 1.00 on the blockchain, right? And we have failed if it is not 1.00 or something is wrong. And I think when we think about these use cases, these average use cases that everyday people experience on a daily basis, I think the stablecoin use case, the boring use case where you're saying, hey, do you understand what the US dollar's role in the world is? And would you like to hold that? I think that's something which people can wrap their head around versus Bitcoin or Ether, something which I love, but just I don't think makes as much sense.
I'll say one very quick thing. I agree with you, right? The blockchain is the secret sauce here, not the cryptocurrencies that sit on top. They serve a purpose, and yes, you need to power the machine. It's called gas for a reason on Ethereum or others, so it does serve a purpose. But I agree, many of the benefits, especially the commerce ones, stablecoins still have all the same positive properties, low cost, immutable, like real-time, global, that any crypto token would as well. So I'm on that bandwagon.
I'll try to sum a little bit of this up, but I think, right now there's an environment where crypto's not always viewed favorably. And what concerns me as someone who's future thinking about technology is that when folks stop working on their Web3 projects, or when they stop working on properties that underlie the blockchain, that they're throwing the baby out with the bathwater. I think the power of harnessing real-time data and real-time ability to have transparency is massively powerful. I believe that this technology has the power to change the way we transact as humans. And that's a bold claim, and it's all about how you harness it. It's a tool. Where I think we can start to see a lot more progress right now is to look at some of the non-financial use cases and to open up ways of, whether that's fractionalizing payments for creators, to power use cases that aren't being served by current rails because of their limitations. So that's an area where I'm really excited about working and partnering with the folks here. I think there's a lot we can do together.
Well, thank you guys for the time. We've talked use cases. It's still early, and so there's lots of exciting things ahead of us. We appreciate your time.